Alrighty guys, so I wanted to do this quick video and go over Google with you guys. I have the contractor here. We're actually getting quite a few things done for the studio here, for the camera, for the videos. So bear with me if you hear any construction type of noises. Okay guys, so let's take a look now. This is Google chart, right? Let's get our drawing stuff up here. Let's see what one looks better. That's the blue. That's the green. All right, the blue looks a little bit stronger here. So let's use the blue. All right, guys, so first off, here is a really great thing for those of you that are members and know our trade plan. First off, the 10 above the 20 SMA. That's our entry, right? But I have a lot of new members that are taking that way too literally. And if you really read the trade plan, and if you watch our YouTube video where I have a 2-hour video on the details of our trade plan, you'll see that not only do you have to have the 10-20 crossover, but the candle, each one of these are all candles here that you can see those on your screen. So each of those are candles representing either 1 day or 1 minute. We're on the today 1 minute chart. So each one of these candles represent 1 minute, 60 seconds. Okay, so like I said, the 10 above the 20 right here that happened, you know, yeah, that's nice, but it's not following our trade plan all the way. We're looking for the yellow, blue, red. The SMAs in that order with a candle above all of those for the breakout momentum cycle. So a lot of people are entering here, which is fine. You know, this is generally here, this is the consolidation phase of our trade plan. You know, you had the breakdown momentum and now you're changing to the breakout momentum, but there's a time here where it's trading in the no trade zone, and that's consolidation period. So this is the no trade zone or the consolidation period. But what happened was right here, we're getting that crossover and we're getting our first candle breakout. So right here is your entry on Google. And this is great because we can see Google actually trading live right now. So tomorrow, you bet your ass that we're going to be trading live on this thing tomorrow. I'm going to try trading off my cell phone for the first time. And I can't do it off my cell phone because I have this actually. But what I'm going to do is probably have my laptop here. I'll make the trades off my laptop, or I can even make them on here. You know, since I now have the touchscreen TV here, and we could make that live. As you can see, the Google is changing as we're talking here. So it's live, and we're able to actually discuss the trades as we're going along per our trade plan. So right here was your initial entry if you're day trading Google today. As you can see, we have the candle above the 10, 20, 50-day SMA, and we have a confirmed breakout momentum cycle starting right here. So what happens then? Well, as you can see, look guys, this is so clear with our trade plan. What's happening? The stock is breakout momentum, and then that first candle that's below the previous green candle is the retracement period back to the SMA. Then we have the big breakout again. And then the retracement. Here's your first candle below the previous candle. This is telling us, this is a sign here. That's our sign that, hey, we're going to be ready to retrace back to those SMA, that 20 SMA. We retraced again, broke out. We had our first candle below the previous candle. And what happened? We retraced, consolidated, and now we had that big breakout momentum cycle. So when do you sell? Well, there's different times you could sell. It depends on the time frame you want to be in. If you're getting the true breakout momentum signals, like right here, this is from 1193. So that right here is 1193, and then right up to here is 1198. So 1193 to 1198, that's $5 move in Google. So if you're entering down here with something that has a delta of at least 0.50, a delta simply means for every dollar that stock moves higher, this is how much that option premium is going to increase in value. So it's very simple to calculate, hey, if you have a delta of 0.5, it has a 5-point move there, then that option just increased by $2.50. So if you paid $5 for it, it's now worth $7.50. That's a 50% gain you just made on that premium for that weekly trade, doing a day trade on that Google. So let's take a look now. So you could either do it like that and then sell the first red candle you have below, or if you're looking for a longer term trade and it's a good cycle and there's positive news, positive reinforcements, positive confirmations for that trade, well, then what we could do is we could enter right there, and then we sell our first candle below the 50 SMA here. So as you can see now we entered at 1193, and what's Google at now? 1203. So it just had a 10-point move. And like I said, if you have something with the 0.50 delta, that 10-point move just made 5 points in that option premium. So if you paid $5 for it, it just increased by 5. It's now worth 10. You just made 100% return. And that's what we're doing, guys. If you look here, this account is at new highs right now. This is the account that we took the $2,538.90. Right now it's at $57,000. And we're up around $3,000 today, $4,000 this week so far with our trades. What trades are we in? We're in the Amazon call spread. We're in a Google call spread. Both the Amazon and the Google, well, the Amazon we sent out Friday, that was sent out as a weekly paycheck trade. I'm probably going to be closing that tomorrow. We're now up just over $3,000 for the day, over $4,000 for the week. So Amazon, as long as Amazon's above $17.20 a share, this spread is going to have max gain. What did we pay for this spread? 20.38 is what we paid for the 17.50, and then we sold to open the 17.20 for $19.16. So that costed $1.22 a contract. The max that could be worth is the difference between the two strikes. Difference between the two strikes, 17.20 minus 17.50 is $2.50. We paid $1.22. It could now be worth $2.50. That's a max net gain of 104.7 some percent return. So you're making over 104% return on that Amazon trade we just made on Friday, as long as it's above $17.20 a share. Well, Google's looking good here. Let's see what Amazon's doing. Let's see where Amazon's at. We got this last week when it was still $1,700 a share. So let's take a look at Amazon now. Let me clear these drawings up. Let's get the 6-month daily chart up here. And as you guys can see here now, Amazon just entered into the breakout momentum cycle the other day. So as you can see here, let me zoom in a little bit more here. So here is the breakout momentum cycle on Amazon. Each one of these, as you can see, we're on a 6-month daily chart right now, okay? But we have it zoomed in. So each one of these candles represent 1 day, okay? 1 day. Okay, so basically it's where it opened, where it closed. So it opened here, closed up here, it had a high here and a low of here. So that's the wick, here's the body, here's where it opened, here's where it closed. There was the high of the day, there was the low of the day. These are your candles here. Okay, so now going back to them. Right here, there was our entry. It came back down to the 50 SMA. And now it's breaking out here. We got in on Friday, so we got in right here. We got in right here, right when we were starting to break out, either there or there. But Amazon now is at $17.74. I'm expecting it to hit $1,800 a share this week. And if we get a trade deal with China, I'm expecting Amazon to get back up to that $1,900, $2,000 a share. Okay, so we're waiting on that. That's really important. You know, right now the market is totally news driven. So I have the TV on right here, CNBC, I have Bloomberg on the other TV, and always watching, listening. I have the Newswire on my monitors display over here, my 6 monitors. And then I'm teaching our students, our members, on this intraday where we're doing live videos. So this is Amazon right here. That's looking great. Remember, we had the 17, 17.50, 17.20 vertical bull call spread as a weekly paycheck trade for this week's expo. So as long as it's above 17.20 a share by this Friday, it's going to make a max gain. Remember what we paid, $1.22? Max it could be worth is $2.50. So that's a max net gain of, I think, like 104.78%, something like that, at least 104% return. That's not bad. You bought it for $1.22 contract. So it costed you 100, because you have to multiply that by 100 since there's 100 shares per contract. So it costed you only $122. My sleeve is there. So it costed you $122. It costed you $122 to be worth the max of the difference between the spread, which is 2.50. You have to multiply that by 100 shares in a contract, so $250. So if you invested $122 into a single contract of this Amazon vertical spread here, the max at one contract could be worth is $250. If you got 10 contracts, it would cost you $1,222. Or $1,220, the max it could be worth then is the $25,000 or $2,500 if you got 10 contracts. If you got 100 contracts, it would have costed you $12,220, and it could have been worth $25,000. So it depends on your sizing of your account, but the nice thing about this, even smaller accounts could get in with vertical spreads on expensive stocks like Amazon, Google, Booking, Priceline, all those, Facebook. So it's nice. Amazon now $17.77 a share, still in breakout momentum. If you're not in this yet, I really like the vertical call spread for this. Okay, so a vertical call spread for like this week's expo, next week's expo. There's news alerts. Department of Transportation asks Inspector General to audit the 737 MAX certification. This is big news for Boeing. I'm expecting Boeing to head lower now on this news. Let's take a look at Boeing. So this is nice, guys. On here, you can see that I have the Boeing chart pulled up here with our trade plan analysis right on here. So as you can see, Boeing, we have our 3 cycles. We have the breakdown momentum, breakout momentum. What's not on here is the no trade zone. Okay, so as you can see, we had the crossover right here. We had our green candle confirmation. Here's the breakout momentum. And your first sell signal, like I said, depending on what you're doing, is right here. And then your confirmation candles right here. That's why that new breakdown momentum cycle started. Now, here's the thing, guys. We had our drop. We had our initial drop in Boeing on that big crash, that big news. So we had our big drop lower here on that crash. Okay, so we had the Boeing crash, stock drops. What's happening? We're in consolidation. Here's the support area. Support's right around 370. We need to break below 370. Our next shift lower here, that's going to represent our next leg lower and our catalyst. What's that catalyst? Well, as you can see, there's a lot of news coming out on Boeing, still waiting for other evidence from the crashes, so still waiting. But as you can see, we right now are in consolidation. It's not doing much. It's waiting for the market. It's waiting for that news. Boeing is a larger company. It's usually an institutional stock, okay? So it's usually your larger institutional funds, hedge funds that are buying this and holding longer term for growth stock, okay? And it also pays a great dividend, so you're getting retirees, IRAs. It's important when you're a trader knowing who is buying that stock. What type of stock is it? Are traders actually trading it, buying and selling quick? Are institutional funds coming in and buying it long term? That's why you're not seeing a huge drop in Boeing. You just had 2 crashes and a company here that's liable for billions of dollars. What's the stock done? It's only down around 20%. What does that tell you? That tells you a lot of people, they have their retirement accounts in it, the IRAs. You know, the institutional funds are holding it, you know, and they're just hoping for a quick rebound here. They're saying, okay, Boeing makes, you know, $150 billion a year, whatever their numbers are. You know, if this costs them $5 billion, they could still stay afloat. It's not going to affect them much, and they'll rebound in the coming years from that. So that's what they're trying to think here. That's why you're seeing Boeing in the consolidation area. But like I said here, you know, it's just waiting for that next catalyst. So that next catalyst could be either any type of news about the crash. It could be something from the FAA, or it could be something from Boeing, you know, finally admitting guilt or something. So that's Boeing. It's in the breakdown momentum cycle still. How would it exit that breakdown momentum cycle? Well, once we get across the 10-day, would have to come back, come up. This would have to go up like that, and then the 50 would have to go like that. But that's not happening right now because it's still in the BDM cycle. And let's take a look now at Google, or let's take a look at Facebook. Facebook is going to be a nice one right here, guys. What am I seeing with Facebook personally? Well, what did I see? We had the breakout momentum cycle, right? It came up, it came down to the SMAs, it broke out, and then what happened? It caused it to come down to this 50-day SMA. What caused it to come down to this 50-day SMA? Okay, well, their chief designer or product, I'm not sure what he was, a product designer or something, he resigned, and Facebook had 4 days here of just absolute terror, going from around 175 a share all the way down to 160, lost 15 points. But here's the thing, guys. Look at this. This is really important. Look how it's bouncing off that 50-day SMA. That's telling me tech is still strong. Tech is still in breakout momentum, and I'm expecting Facebook to continue higher here, depending on any news. Obviously, if there's any bad news coming out with it, you know, it's going to head lower here. But this, to me, is looking good. I'm not entering it yet. I want to see another confirmation candle, a green candle confirmation tomorrow. Maybe then I would enter Facebook. I'll stay away for now. Let's take a look at Johnson & Johnson, what that bad boy's been doing. Alrighty, guys. So we got in. This is all messed up here. Maybe when this is supposed to extend the NTZ. Okay, so we got in. Actually, that's supposed to go there. So we got in. I forget when we got in this trade. You guys could look on our Facebook and see when we got in. But we had a nice breakout. They announced their drug. It had a nice climb, came back to the 10-day SMA, climb, back to the 10-day SMA, climb, back to the 10, climb, back to the 10, climb, and now it just came back to the 20. Now it looks like it's ready to climb again. So Johnson & Johnson, this looks good. This is something I might buy calls in, or a vertical call spread. Johnson & Johnson, you know, if that's green tomorrow, that will be a check. I'll probably do something with that. Maybe something like an in-the-money vertical call spread for a paycheck trade for me. All right, let's take a look now at Google one last time, see what she's doing now. She pulled back a little bit. Guys, look at this again. Look at this. Since last time we were here, this was the candle we were at. Remember, it was at 12.02 a share, okay? It was just at 12.02 a share at this candle. What happened? It followed our trade plan while we're doing this video. What happened? It came back down to the 10-day SMA, broke out, reached the high of 12.02, came back down to the 10-day SMA. Now it's breaking out again. This is telling me this is going to be a stronger breakout. I'm expecting Google to continue higher here. This is a 6-month chart, though. This is not today chart, so tomorrow, I'm expecting Google even higher tomorrow. I like this stock. Google is a great trade to make now. If you're not in Google, I would get into Google, GOOGL. That's the ticker symbol, GOOGL. And I would do something personally like the 1197.50/1200 vertical call spread for next week's expo for at least less than 1.30. I would not pay more than $1.30 because the max that could be worth is $2.50. So if you paid $1.30 for it and it could be worth $2.50, it's still a nice gain, but I like to have at least 100% return. So 2.5, divide that by 1.3. That's a max net gain of 92.31%. 92.31%. 92.31% max gain. So your max gain is, it's not dropping. It's still in the breakout momentum cycle, Leslie. 92.31% max net gain. Okay, and like I said, it's in the breakout momentum cycle, coming down to the SMAs, breaking out again. Google also has big news here. They just announced their new gaming system, taking on Microsoft. Seen that this morning, so I expect Google to continue higher here. Also, you know, there's another one with the election and stuff coming up, more ads. So Google is a great trade here. I'm going to be making another trade. I just made a trade on it today, doing the vertical bull call spread as a weekly paycheck trade, an in-the-money vertical bull call spread. And I'll probably be looking to do another one for next week's expo tomorrow, depending on what the market does. So that's about it, guys. If you guys like these videos, we could do them live, and we could do live trading on them as well. Today's the first day with it up. I have the contractor here, actually. They're doing a lot of stuff here at the home office, as well as our TSE headquarters. So, guys, I will see you in the trade room. If you guys want to sign up, and you're not yet a member, this is only for new members. You could go to our website, thesantorelliexchange.com, use promo code FREEMONTH, all capital letters. I'll see you in the trade room, guys, and let's get to live trading tomorrow.